and welcome to another episode of ECCB Connects, a program produced by the Eastern Caribbean Central Bank to share with you who we are, what we do, and how we serve you. Are you unsure as to the kinds of financial decisions to make in these uncertain times? Is it a good time to get that mortgage, student loan, or that new car? We help to answer these and other questions as we navigate financial planning during uncertain times. Stay with us. We'll be right back.
The Eastern Caribbean Central Bank is rolling out Dcash, the next step in the evolution of the EC dollar. Use Dcash to send and receive money to and from friends and family. Make payments directly from your smart device. Make payments from wherever you are. Download the app from the Google Play or Apple Store and sign up, or visit dcashec.com for more information. The future of the EC dollar is digital. Let's make history together.
Thanks for staying connected with us. My guest on the program is Sharmaine Francios, CEO of National Commercial Bank Anguilla. She will be sharing some insights on financial planning during uncertain times. Sharmaine, thank you so very much for agreeing to be on our program today to share with us your expertise in this area.
Thank you, Shanna. It's always a pleasure to participate in such forums. So, I will look forward to our discourse.
Sharmaine, we are in a pandemic and everything is so uncertain at the moment. When we're faced with uncertain situations, there is a tendency to put everything on hold and adopt a wait and see approach until the situation improves. What recommendations do you have as to the approach people should take in these times?
So in terms of financial planning and making decisions in the current environment of COVID-19, which is new to all of us. COVID came about and has basically changed our lives completely. But notwithstanding the pandemic, we encourage persons to continue on the path of sound financial planning. So now is not the time to put financial planning or your financial plans, your goals on hold. In life, we will face all sorts of shocks. We went through the global financial crisis. We now faced with the pandemic. You may be facing your own individual specific shocks, for instance, health crisis. We will go through crisis throughout our life. But it's important as we go through that, we adjust to whatever that new normal is. And so financial planning is critical, notwithstanding. So placing it on hold is really not the best option. What in terms of recommendation, what that would mean is to relook at your plan. So a financial plan is really a moving plan. As things change in your life, you have to keep making adjustments to that plan. And one of the critical things for us, particularly during the pandemic, is to relook at how do we plan financially, our income, how do we manage that income to ensure that we still meet goals and objectives. And there are several recommendations I can speak to. One of the critical ones is to reassess your spending. Prioritize in terms of wants versus needs. So the essential thing for us today is to focus on the essential items, your needs, and the non-essential can be removed. So the focus have to be on food, health, safety, the core. Reassess your debt situation at this time. So for instance, even when you look at across the ECCB region, banks have given moratorium support up to a value of 2.7 billion EC dollars. How do you plan post-moratorium? So when that loan deferral comes to an end, how do you plan financially? What are the options available to me? And even during the pandemic, one should still seek to look at what are the opportunities that are available, where you can still invest. So there are opportunities that may arise. So in a nutshell, keep pushing on in terms of your financial plans. It may not be as you intended, because persons may have in terms of the income may be interrupted during the pandemic. If you're unemployed now, your whole financial planning aspect will change. So it all depends, again, on your cash flow situation at this point and how best you plan ahead.
Now, people struggle with real questions like, should I proceed with my mortgage loan at this time? Should I take should I get a new family vehicle? Or for a student, should I get this student loan? How does one know if it is really a good time to make these sort of, important financial investments?
Making financial decisions like in terms of making investments, be it education, with acquiring a mortgage, etc. It all depends on affordability. So the end result is whether you can afford that financial, that decision that you're taking on. So if you're going into a mortgage loan, you have to assess whether your cash flows can support. That's a critical aspect, whether your cash flows can support and assessing affordability. Right now, during the pandemic, interest rates are at its lowest ever. When you look at mortgage rates right across the region and globally, rates are at its lowest. And so it's an opportune time for investors and borrowers to take advantage of the low interest rate environment. But again, the critical aspect is assessing cash flow and affordability. What I would advise and what we typically encourage as bankers is to follow what we call a minimum rule, the 30-20-3 rule. And that rule has varied a bit because of COVID. Now, when I say the 30, if you're looking at, for instance, a mortgage investment, where you go into a bank for a mortgage loan, one should not exceed at least 30% of their gross income in terms of mortgage payment. Again, that's the minimum. The higher end would be around 40 to 45%. The reason for the 30 is to ensure that you have sufficient of your income left if you have to take on additional financing, be it venturing into a business, acquiring vehicle, etc. There is room, to venture into other types of arrangements, particularly in a startup arrangement. If you speak into a small business arrangement, the 20% rule really speaks to, in the case of a mortgage, it speaks to having that 10% to put down as your equity injection towards that mortgage. So that is why it's critical to have, over your working life, to have some discipline to put monies aside to build that 10%. The other 10% of that 20% rule is really to have sufficient, healthy cash flow to support whatever eventualities as you planning ahead. And the 3 rule is 3 times your annual income. Now, with low interest rates, with the low interest rate environment, one can safely move to about 5 times the annual income because of the current interest rate market, which is, as I said, at its lowest. But the important thing is to do that assessment, and your bank will work with you to do that debt serviceability, whether you can afford whatever investment that you venture in.
And this is sound advice for someone just simply asking, pondering this question: should I save or spend at this time?
Okay, so saving is critical, and spending is equally critical, because again, it's really about achieving a balanced life. Now, once you have planned spend, because there are different types of spending. If the spend is planned and the affordability is assessed, then that would be what we consider intentional spending, where you make your debt payments, your insurance premiums, and then there are also conscious spending, where you would have factored in your budget monies assigned for holiday, entertainment, etc. But the important thing is to have a budget and to ensure that the budget meets prudential guidelines around how you spend your income. So spending, there is room for spending, because we must, in terms of meeting our day-to-day, but ensuring that spend is intentional and is conscious. There's unconscious spending, which is the one that is detrimental to achieving your financial objectives. So where you spending without a plan, there's no budgeting, basically a lot of impulse buying, that type of spending will affect you achieving your financial goals. Where you have in terms of saving is critical at this time. And even throughout one's working life, one of the advice that we always put forward is that one should always put aside at minimum 10% of the earnings. So whatever you earn monthly, you need to put aside that 10% of that monthly at minimum. And that will go towards achieving some of your life goals that you'd set around building that emergency fund. So for persons that are going through the pandemic with ease, these are persons that have built an emergency fund. So that fund now can assist in terms of meeting their expenses. And typically the rule of thumb is that one should have at least 6 months of expenses saved up. The pandemic now has shown us that you need to have way more than 6 months, because we now were about 18, almost 2 years into heading into 2 years into the pandemic. It's critical, that spending has to be planned spend, and likewise, saving has to be intentional saving. And so even right now, where we are operating in a pandemic, I advise a lot of persons that are still gainfully employed to start putting more aside once you can put more aside. And so once you set up that survival budget, and I tell persons I work on a survival budget right now because we're in COVID. So where I had spending in a lot of areas where today we really don't have a choice than to cut back, because with a lot of the restrictions, a lot of the entertainment is is not possible. So you tend now, a lot of what I used to spend in entertainment or travel, you can now, put that into saving. And as you build that saving plan, you can then look at investing in more longer term to meet retirement, children education, etc. And so there is, to answer your question, you will have to spend, but it has to be planned, and saving is critical. More so in this current environment of the pandemic, with all the uncertainty around the pandemic.
So it's very important that we assess our personal situations, so that we can continue to plan and do so successfully.
Definitely. So I even sometimes give some basic examples. Some persons come to you and they say, I'm maxed out. But if you look at just persons who eat out, if you eat out 5 days a week and you look at cutting back to 3 days a week, then those funds can be allocated towards building a savings plan. If in terms of shopping and the salon for us women, you can look at cutting back. Now, if you look at a basic EC $100 and you keep that on a savings plan with a financial institution, over 10 years, you'll be able to accumulate about 16,000, roughly a little over 16,000 over a 10-year period. And over a 20-year period, you'll be able to accumulate around $46,000. So just $100, you set aside and you forget. That, if you have that today in the pandemic, that can help, cushion some of the expenses that you would have to face today, notwithstanding that you don't have that income, for a person that would have been affected, be it unemployed or underemployed.
As an expert in your field, what would you say are some of the major factors that people should consider when making major financial decisions?
So the critical factors you'd have to look at is, what are the financial resources that are required in order to achieve that? So say, for instance, it is investing in a business enterprise, a small business enterprise. What level of resources would be required? In the case of going into acquiring a mortgage, what level of equity injection is required? And not just that, in the case of a mortgage, there are other cost elements that one has to consider. And so another aspect in terms of factors is the cost. So most times when one venture into a mortgage, you consider affordability in terms of debt service. My income can support that monthly repayment. But there are several other factors that, that one must consider. One factor being whether you can afford the annual insurance to insure that property, whether you can afford the maintenance of that property. You have property taxes. So there are a lot of costs that one would have to consider. So cost being a critical element of that decision. Another factor is to look at what are the risks associated and whether that the risk profile of whatever financial decision or investment decision that you're considering, whether it meets with your own risk tolerance level. So it's critical that that assessment is done. And so understanding your own risk profile would help in deciding on what decisions that you take. You also have to look at the current state of the economy, whether the economy will support the growth that I'm projecting. Am I being too ambitious in terms of my projections? And so even in the current COVID environment, we must do the necessary assessment. Venturing into making major decisions today, there must be a thought process that must go through. And all of those factors must be considered, because at the end of the day, once you venture into that decision, that venture, you are locked in. And so financial resources, the expected return on investment, I don't think I mentioned the return, to assess what that net return is, the costs, the risk, tax, level of expertise, and the state of the economy as some of the major factors.
We know definitely that we are in uncertain times and we are supposed to be cautious, but as you said earlier, we're not to put our financial planning and everything on hold. It's not wise to do. And I'm sure that even in these uncertain times, there are opportunities that can, come our way. What's your advice on this? Is we want to end on this note of optimism. Are there opportunities that can still present themselves in these uncertain times?
Oh yes, definitely. And you can see even. I'm operating now in Anguilla, and you can see the level of development, I should say, even in the pandemic. So persons have looked at what the opportunities that present. So in the case of Anguilla, we are seeing a lot more construction. So persons have taken advantage of the low interest rate environment, and that's an opportunity. So where you would have been waiting because mortgage rates were at, say, the 8 and the 9 and the 10, mortgage rates are around at as low as 5%, and in some jurisdictions maybe lower. So is to take advantage now of those low rates and see how best you plan. So that's an opportunity here. We also seen a lot of small business being, business persons, young entrepreneurs, people venturing into new business ideas. People are retooling themselves, reskilling, and you see more persons have their home gardening. For me, I can speak for me. I have more time now. I spend way more. There's more balance. So I always spoke about balance, but now I'm enjoying some balance because with all of the restrictions for movement and you cannot, and a lot of, definitely things are not how it used to be. So socially, you have to create a different type of social life. So for me, I spend a lot more time jumping on my trampoline with my kids, things that I rarely did. And so I think persons, it's really an opportunity to focus on self, that whole mental health, spend more time with family, look at how best you can reskill yourself during that time, take on additional courses. If you may have a passion, you may be doing something as a hobby, but may be forced to do it as a business venture because of your current situation. But my advice is to take the leap and open eyes to the opportunities that are being presented by the pandemic. It's a difficult period, But with with difficulty comes opportunities. With a lot of the uncertainty, I find we have a lot of, there's a lot to enjoy still.
Sharmaine, thank you so much for sharing these invaluable insights to help us to navigate these uncertain times financially.
Yeah, thank you so much, Central Bank. And it's a pleasure, listeners, to be here to speak to you. Though brief, but I always enjoy doing speaking on matters to do with financial planning and money management.
And now for this week's financial tip.
Emergencies happen when you least expect them. Put something aside to cover the unexpected. Aim to have at least 3 months' salary set aside for emergencies.
We've come to the end of another episode of ECCB Connects. Thank you for watching. Be sure to connect with us next week for another program where we'll share with you who we are, what we do, and how we serve you.